Welcome to TalkTickers. Today we're diving into the latest from Williams. Their first quarter 2025 earnings call just happened.
And the story here is, well, pretty positive, wouldn't you say?
Definitely. Strong performance and, a real sense of increased optimism looking ahead.
Right. So let's unpack what's driving that and maybe what it means for the wider energy picture.
Okay, so first up, the snapshot. How did Q1 actually look?
Very solid. Williams reported really good growth in their base business.
Okay.
Adjusted EBITDA, that key profit measure, was up 3% compared to Q1 last year.
Right.
And interestingly, if you pull out their marketing arm, that growth actually jumps to 5% across, all the other segments.
So the core operations are really humming.
Exactly.
And it wasn't just a good quarter, right? They've actually upped their forecast for the whole year.
They have. They raised the full year adjusted EBITDA guidance pretty significantly, now expecting 9% growth.
Wow, 9%. What's behind that now?
Well, it seems to be a mix of things. This strong start, obviously, but also a recent acquisition they made, and just general confidence in the projects they have lined up.
Feels like momentum building.
It does. And what's kind of remarkable is their track record here. This is now the 37th quarter in a row they've met or beaten the consensus estimates.
37 quarters. That's quite a streak.
It is. And during that same time, they've actually raised their own guidance 8 times.
That consistency really tells a story. Predictability.
Absolutely. Speaks volumes about the stability of their business model.
And for investors focused on returns, any news on the dividend front?
Yes. Good news there, too. They increased the quarterly dividend by 5.3%. It's now 50 cents per share.
Okay, another clear signal of commitment to shareholder returns.
Mm-hmm.
All right, so that's the big picture. Let's dig a bit deeper now. What exactly fueled that strong base business performance in Q1?
Well, the real stars were their transmission and Gulf of Mexico segments. Both hit record EBITDA levels.
Records, okay.
Yeah. And we also saw, strong comebacks in their gathering businesses, both out west and in the Northeast.
And what's underpinning all that?
It really comes down to record levels of contracted natural gas transmission capacity, plus that steady growing fee-based revenue.
Right, that fee-based model insulates them a bit from commodity price swings.
Precisely. Much more stable income stream.
No, something that really jumped out was this move towards powering data centers. The Socrates project in Ohio, that feels different for them.
It is a bit of a strategic evolution, yeah.
Mm-hmm.
But it's a response to something massive happening, the huge surge in power demand from the digital economy, particularly data centers.
So they see an opportunity there.
A big one.
Mm-hmm.
Socrates is about a $1.6 billion investment. That covers dedicated power generation and the gas pipeline infrastructure needed to feed it.
$1.6 billion is serious commitment. Is it speculative or?
Well, here's the key part. It's backed by a long-term 10-year power purchase agreement, fixed price. And there's even potential to extend that deal.
So it's contracted, less risk.
Much less risk. And the return profile they're talking about is consistent with like a 5 times EBITDA build multiple, which is, pretty healthy, especially for something with this kind of contracted certainty.
And leverages some of their existing footprint, I imagine.
To some extent, yes, which helps.
And you mentioned it might not be a one-off. They're looking at more projects like Socrates.
That's what they indicated. They're already moving ahead with 2 more power projects using the same blueprint. Ordering equipment, getting things lined up.
Okay.
Again, backed by similar long-term deals. It really suggests they see this as a major growth avenue, providing dedicated power for these big tech loads.
Interesting. Okay, shifting back slightly to their more traditional business, the Transco Power Express pipeline. What's the deal there?
Right, Power Express. That's a big expansion on their main Transco system, about 950 million cubic feet per day of new capacity.
And where's that capacity heading?
It's aimed squarely at serving the growing power demand in the Virginia area.
Makes sense. Lots of data centers there too, I suppose.
Could be part of the driver. A key advantage here is that they're mostly using existing rights-of-way, existing infrastructure corridors.
Which simplifies things. Permitting, costs.
Exactly.
Yeah.
Reduces hurdles, and it even gives them the option to expand further later if the demand keeps growing. They're expecting similar returns to other successful projects, and customer interest seems really strong.
Like adding a new lane to a highway that's already busy.
That's a good analogy, yeah.
Now, besides building things themselves, they also made an investment, right? A stake in Cogentrix Energy.
They did. A 10% interest.
What's the strategy behind buying into Cogentrix?
It's really about market intelligence, getting a better understanding of the power generation market from the inside.
Okay.
how gas is used in power plants,
Yeah.
how they can optimize their gas supply to those plants. It gives them valuable insights.
So it's not about them suddenly becoming a merchant power generator.
No, they were pretty clear about that. It's not a move into merchant power. It's more about strategically positioning themselves to better serve that really important and changing customer segment, the power generators.
Got it. And operationally, sounds like they were busy actually getting projects finished and running in Q1 too?
They were very productive. 2 big projects came online, both fully contracted.
Which one?
The Southeast Energy Connector down in Alabama and the Texas to Louisiana Energy Pathway along the Gulf Coast. Both are expansions of Transco.
More capacity flowing?
Yep. And looking forward, they've already started construction on more expansions in the Southeast and the West. They expect almost 2 BCF per day of new capacity online just this year alone.
Wow, 2 BCF a day is substantial.
It really is. A lot of new infrastructure hitting the system.
And how's the Deepwater Gulf of Mexico business doing?
Also performing strongly. The Whale expansion project has been ramping up nicely through Q1, and Chevron's Allie Moore project just started up too. Plus, you've got the Shenandoah and Salamanca floaters, big new production units that are being commissioned right now.
So more volume coming from offshore soon.
Yeah, they expect those to really start contributing significantly to cash flow, particularly in the third quarter.
So all this activity, the results, it must be looking good from a financial health perspective.
It seems so. S&P actually upgraded their credit rating during the quarter up to BBB plus over.
That's positive.
And Moody's put them on a positive outlook.
Uh-huh.
Both point to, the resilience of the business and their strong balance sheet.
Did they mention capital spending with Socrates and all?
Yeah, their planned CapEx for the year's up, but they said that's primarily driven by that big Socrates project investment.
Makes sense.
And overall, the expectation is that growth will actually accelerate through the rest of the year as more of these projects come online and start generating revenue.
Okay. And one final point, the leadership change.
Right. Alan Armstrong is transitioning to executive chairman. That happens July 1st.
And who's taking over as CEO?
Chad Zamrin will become president and CEO.
How's that being framed? Any big strategy shift expected?
No, it's being presented very much as a planned succession, happening from a position of strength for the company.
Okay.
Both Armstrong and Zamrin have emphasized, continuity, expect the current strategy to continue. Smooth transition is the message.
All right, so let's pull it all together. For you listeners, what's the main takeaway from this Williams call?
I think the key message is really about robust, growing demand for natural gas and, crucially, for the infrastructure Williams provides.
Right.
And that strategic pivot towards power solutions for data centers.
Yeah.
That shows they're thinking ahead, adapting to where energy needs are heading, especially with the digital economy booming.
And the focus on contracted projects.
Yeah, that disciplined approach focusing on high-return projects that are already locked in with customers that provides a level of stability and predictability that's pretty attractive right now.
Plus the consistent dividend growth.
Yeah. Exactly. Underscores the financial stability and the cash generation of the business.
Okay, now for our favorite part, the This Is Not Financial Advices segment. Time for some outrageous but plausible trade ideas based on everything we've heard. What have you got?
All right, here's one to chew on. Given Williams's big push into these data center power deals like Socrates with those long-term fixed price contracts.
Yeah.
What if you went long Williams, but at the same time went short a pure play merchant power generator? Maybe one that's really dependent on, say, the short-term auction markets, especially somewhere like the Northeast.
Interesting. What's the thinking there?
The thesis is basically that the market might start to favor the predictable, almost regulated-like returns from these contracted data center deals over the ups and downs, the volatility of the traditional merchant power market, especially with ongoing worries about grid reliability.
So betting on stability, winning out over spot market volatility.
Okay.
Like it. Okay, here's another angle.
Go for it.
Think about LNG exports. Huge growth expected there. And where's a lot of that gas going to come from? Places like the Haynesville Basin.
Right, a key supply basin.
So maybe you go long Williams, betting specifically on their gathering and processing assets in the Haynesville, anticipating those volumes ramping up.
Okay, I see where you're going.
And you pair that with the long position in an LNG shipping company, one that has its ships locked into long-term charter contracts.
So you're playing the whole value chain. The gas moving domestically via Williams and then internationally via the shipper.
Exactly. Capturing the volume increase from wellhead to water, essentially.
Both. Definitely out there ideas, but you can see the logic trail stemming from the trends discussed in the call.
For sure. So wrapping up, Williams's latest call really paints a picture of a company firing on all cylinders, you know?
Yeah, capitalizing on current strengths, but also making some pretty smart strategic bets on future growth areas.
Right.
That data center power play is fascinating.
It really is. And that focus on contracted high return projects offers a certain resilience. So maybe the final thought for you to ponder is this. How much will this diversification into powering data centers reshape Williams long term? And what other, maybe unexpected connections might pop up as energy and tech keep getting more intertwined?
Definitely something to watch.
Absolutely. Thanks for tuning in to TalkTickers.